What's up, guys? I'm Nobody Special. Today I came across a couple of articles that show that we're already starting to see signs of weakness in the demand for base metals in China. And this could be an early indicator of my thesis that the Evergrande crisis and the collapse of the Chinese housing market could indirectly lead to a shortage of silver. You ready? Hit it. Thank you for joining me. I'm Jack Gamble, and I'm Nobody Special. And a couple of weeks ago, I made this video about how the China Evergrande collapse and the situation with Chinese developers going bankrupt and the slowdown in Chinese construction could indirectly lead to a shortage of silver. Now, since making that video, I've also gone on some other channels like the Economic Ninja and more recently Maneko64 to talk about that theory. Well, I saw a couple of articles today, and I'm starting to see some early signs in the price action of some of these base metals that says maybe that story is already starting to play out. Now, before we get into the numbers, I have to ask, could you please like this video, subscribe to my channel, and hit that notification bell? It really helps me out, and it helps me to keep this channel growing. Now, real quick, I'm not going to rehash the whole theory, but I just want to real briefly summarize. The theory is that because most of the silver on the market, about 60%, actually comes from copper and zinc mines, not gold or silver mines, that a slowdown or a weakness in the Chinese housing market could cause some copper mines and some zinc mines to go out of business, and therefore the silver that they incidentally find will no longer be feeding the market. And so the collapse of China Evergrande and the Chinese housing market will indirectly result in a shortage of silver. Now, if you check out that video I made a few weeks ago, I have all the charts and the DD that goes into that. We're not going to rehash all of that today, but I did see some articles today that tells me we may already be seeing early signs of this. So with that, we are going to shrink my big fat melon of a head and get into some of these articles. And here we go from investing.com. Zinc dropped as weak property demand and rising warehouse inventories in China. Zinc yesterday settled down by 2.94% at 264.15 as weak property data and rising warehouse inventories in China pressured prices. China's zinc output in October fell 9.2% year on year to 532,000 tons, the NBS said, hitting its lowest monthly total since May as power curbs on smelters constrained production. Total zinc inventory across 7 Chinese markets stood at 135,200 metric tons as of November 15th, up 3,900 metric tons from November and 7,400 metric tons from November 8th. The inventory in Shanghai rose slightly as the arrivals of imported zinc declined and downstream demand stabilized. The stocks in Guangdong rose sharply as the output of smelters showed recovery and downstream demand weakened. So what we're seeing here is interesting. We're seeing inventory levels are rising even though the zinc smelters have been shut down by these recent power curbs in China. So you would think with these smelters being shut down that you would see the inventory shrinking as industrial demand drained inventories that were no longer being replenished. Well, that's not happening. We're seeing a slowdown in the production at these smelters, and yet the inventory is going up even though there's not any replenishment of that inventory going on. That means there is major weakness in the demand for zinc in China right now. And remember, zinc mines is a major source of incidental silver in the open market. Now, there's more evidence of this I found in this article in Hellenic Shipping News Worldwide. China's steel output in early November down 20% on the year, according to CISA. Now, remember, the main use of zinc is in galvanizing steel, so this makes sense that we would see a reduction in steel output if there was a reduction in zinc. And the weakness in the Chinese property market means less demand for steel. Less demand for steel means less galvanizing, means less zinc used. Less zinc getting used means less silver coming out of the ground. China's daily crude steel output in early November was 20% lower year on year to be slightly above October's average, according to China Iron and Steel Association. Now, I want to scroll down to this part of the article. According to sources, average blast furnace utilization rates in 2 cities I will not try to pronounce, 2 major steelmaking hubs in China, were at below 65 and 70% respectively as of mid-November. Meanwhile, oversupply concerns have emerged amid expectations of soft end-user demand in Q1 2022. Some sources said both traders and end users were not interested in restocking as steel market may continue trending downwards amid oversupply in the first quarter of 2022. Although daily crude steel output in early November was almost 20% lower on the year, combined finished steel inventories at steel mills and spot markets monitored by CISA as of November 10th were still 0.1% higher on the year at 22.91 million metric tons, indicating dip in steel demand still outstripped that in production. So we've got production going down and we've got inventory rising, the same as the story with zinc. So China's metals industry is seeing some difficulty right now. And you don't have to just listen to that one. Here we have in recycling today, China's steel slowdown continues. Steel output in the People's Republic of China dropped by 4.9% in October compared with the prior month, according to the nation's Steel Industry Trade Association. Citing figures from China Iron and Steel Association, or CISA, S&P Global Platts has reported that China's daily average output of steel has declined for the sixth straight month, hitting a low not seen in almost 4 years. The financial press has reported on the effects of power shortages in parts of China, but the slowing property market and construction of apartment towers may be having an even larger impact on steel demand and thus output. Platts notes that Beijing-based property data provider China Index Academy has recorded the value of financing arranged by China's property developers dropped 60% month on month in October and is down a whopping 75% compared with 1 year ago. Not enough steel demand generated in the domestic market has led some mills to operate at losses since last November, writes Platts. CISA passes its figures on to the Brussels-based World Steel, which therefore also has been tracking the decline in steel output in China. World Steel notes that in China there have been marked signs of deceleration in steel-using sectors' activity since July, leading to a steel demand contraction of 13.3% in July and then 18.3% in August. In September of this year, steel output fell 21.2% year on year compared with September of last year, according to World Steel. So we are seeing a major slowdown in the demand for steel and thus zinc in China. And if we look at these futures prices of zinc, we are starting to see some of that reflected. And you can see, despite that big spike that we saw in October, when the announcement came about the energy crisis and how the smelters were shutting down and how the world was going to be starved of zinc, the prices after that initial spike have come almost straight down. I mean, folks, this is starting to look like that lumber chart of earlier this year. And, it seemed when lumber prices were just going parabolic that prices would never come back. And I remember the Economic Ninja being the only voice out there that was saying, this lumber story is wrong. It's going to crash. It's going to come down even lower. And by the end of the year, nobody's going to care because they're not going to have anything to eat. Well, here we are. That was a pretty good call. And it looks like we see a similar story playing out. Now, a few weeks ago, it was really hard to imagine an oversupply of some of these metals, especially as copper was almost out at the LME and prices were surging and we're seeing these big spikes. But here we have it. It's coming straight down ever since. And if these figures out of China are correct and the steel demand is slowing and the zinc is starting to pile up and the inventories are piling up, then these prices are going to come down. Now, zinc is only half of the story here. The other side of the story is copper, and copper is no different. I saw this article today. This is in Mining Journal. Property the key for China's copper prospects in 2022. Copper has the greatest upside momentum of all base metals in China heading into next year. But prospects for the red metal hinge on a recovery in the domestic residential property markets, delegates heard at the recent non-ferrous metals industry chain annual conference in Shanghai. So this is information that was overheard at a mining conference in Shanghai, that they are worried about the prospects of the property market affecting demand for copper in China. Remember, a lot of silver comes out of copper mines. Reading off of this article, there are some uncertainties in the demand side for copper, said someone I can't pronounce, Deputy General Manager of state-owned China Copper International Trading Group, on a panel discussion. People think consumption from Western countries may pick up and some of the export orders will return back to the local market, but we still have problems in real estate demand. This is a really big concern. If we look at China policy and the dynamics in the real estate sector especially, we believe the deleveraging campaign, referring to the 3 red lines policy and the Evergrande collapse, will continue in the first and second quarters of next year. China implemented tougher risk controls known as the 3 red lines on the property sector a year ago that have cast a pall over the pillar of the world's second largest economy. Property accounts for 22% and 15% of copper and aluminum demand respectively in China, according to the consultancy group CRU. Now, I would add in addition to that 22%, copper, a lot of copper is used in the build out of the electrical grid that goes into a lot of this property development. So while 22% is used in buildings, think copper piping and plumbing and wiring within the buildings, also keep in mind that the build out of the power grid is going to slow down as the build out of new construction slows down. So that means we could see more than a 22% reduction in copper demand. As a key driver for China's economy, property itself has far-reaching and significant influence across other important sectors. More than 1/4 of China's GDP stems from property and related sectors along its supply chain, according to Moody's. So what does that look like in the price chart? Well, this one is not quite as convincing as the zinc chart, but we do see here that copper is down right around a support level. I wouldn't be too surprised to see it bounce a little bit from here, but keep in mind it was only a few weeks ago right here on this spike where we saw copper almost ran out at the LME. I mean, a few days ago, they were jacking up margin requirements. They were pulling a lot of the same shenanigans that we saw the COMEX pulled during the silver squeeze in February, where they were cranking up margin requirements and they were, position close only. A lot of that stuff was going on in the LME. They were basically forcing people to settle in cash or outright triggering stop losses. So it was only a few days ago we were talking about an outright shortage or the world running out of copper. And then here we are, prices have come right back down to where they were. Now, I've heard a lot of people refer to things like the build out of solar panels and renewable energy in the West. You have to keep in mind, folks, any increase in any one particular sector in the West just pales in comparison to the hungry beast that has been the Chinese growth engine for the last 30 years. They have consumed half of the world's steel, zinc, concrete, aluminum, everything. I mean, almost half of all raw materials in the world have been flowing into China for the last 30 years to facilitate this growth. And China is only about a fifth of the world's population. They've been consuming half of the world's raw materials. Right? So building a few more solar panels in the United States is not going to offset that much demand for zinc and that much demand for copper in China. No way. Not even close. We're not even in the same ballpark here. So long story short, we're already starting to see signs of weakness on the demand side for copper and zinc, which are these vital elements when it comes to silver mining, because most of the silver in the world comes from copper and zinc mines. So if there is a major downturn in the price of copper and the price of zinc, if we start to see global production of those metals drop, then we're definitely going to see a major reduction in the production of silver because it comes from those same mines. If those mines go out of business, the silver stops coming out of the ground. That creates a shortage of silver. Now, I have been talking about this for over a month. I've gone on a couple of other channels to talk about it. I still don't see anybody else in the world talking about it. So all I'm asking is that when this happens, don't forget to mention that you heard it from nobody special first. I'm not above taking credit for this. It was my idea. I want a nickel every time somebody says it. Yay, capitalism. Folks, I want to thank you for your time. Thank you for watching this video. Don't forget, give me a thumbs up, subscribe to this channel, hit that notification bell. It really helps me out, helps me to keep this channel growing. Also, just a reminder that tomorrow is Friday, and that means my live stream at 3:15 p.m. Eastern Time for Power Hour, where I take your questions live. So if you have questions or topics you want me to cover, by all means, let me know in the comments and come check out that live stream at 3:15 tomorrow. Till next time, live small and dream big.